Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And on 11/13, a couple of days later, when I was still doing this strategy, we have the Swiss franc, the dollar versus the Swiss, had a large two-week retracement in September to a low of 107. The 112 put hedge was removed, the one that I did, the one that I suggested. The Swiss franc, the dollar, moved back to the 112.50, 118 range, which is being broken to the upside today. So in other words, at this point in time, as I'm doing this slide on 11/13, I'm actually breaking out of the top of that range. So 116 put based on the 10-day moving average, or the 10-week moving average, is planned due to the dollar testing the resistance near the 88 level again. So now what I'm saying to myself is, okay, I'm making a breakout, but it has the possibility of stalling it a little bit higher up because the dollar index itself still has to absorb all the resistance near the 88 level. And notice here I made a note. As I was doing this slide, I was watching Bloomberg, and Walmart had released their quarterly earnings and their fourth quarter sales, and they came out here and they said, well, we're narrowing our fourth quarter sales and earnings forecast due to currency fluctuations affecting their overseas sales. Okay, so this is just as a little side note here, the currency markets are starting to affect the exports from the country here. So the supposedly only piece of strength in our U.S. economy is being affected right now. Okay. All right, so here we broke out through the upper line, and we're starting to probe a little bit higher. So there could be a possible new leg up here. I would probably want to buy protection where that moving average is, close to 116. I have not done so yet. I was going to watch it to see what happens with the dollar as it probes that area. I could probably get the puts a lot cheaper if I get on it right away, but honestly, I'm running around doing a lot of teaching right now, so I'm going to kind of have to, plan a little better around my time, because I have not been able to put on any kind of a hedge with this position right now. But I promise you I will. Okay. Last one we're going to talk about here before we take some questions and answers is the dollar versus the yuck, or the yen. So on 6/28, we had a couple of patterns working for us. We had an ascending triangle breakout, and we had a retest of where that breakout happened. Okay, and that happened right around, on 6/30, I made a note, pull back to breakout by July 106 calls. And at that time, I was looking for a short-term kind of strategy, just looking for some kind of a bounce and expecting it to happen within a few weeks, okay, on a test of that support area that used to be resistance. So that was a short-term strategy that I was looking at. It gave us a pullback to the 106 entry at the beginning of July and then stalled at 110 in August. So it stalled at 110 in August, so it did make a nice little move. So the initial position was exited because I just really didn't have very much time on the calls that I used. But I made plans for a re-entry at the time. And also I was kind of worried about this unwinding of the carry trade and the impact on the dollar versus the yen because, face it, the yen was strengthening against all the high-yielding currencies because in the yen carry trade, all the shorted positions had to be purchased. So I kind of noticed that the trade was stalling out. We have another little higher consolidation here, and I'm looking at it at this point in time, and I'm saying, okay, we still got a possible pullback to 105 for support, and now we're kind of stalling out at 110. So as I look here, I'm planning for either a breakout at around 828 or so out of the top, or possibly a pullback to the lower trend line for some kind of pullback to support. Now remember, it already tested that support one time at 105, so this would be a double bottom situation if it worked. Unfortunately, we did stall out here, so we did have resistance above 110. We should have had support below 105. So on 9/8, this is the picture I'm looking at on the charts. And now I'm making my plan going forward. I'm also, at that time, since we were talking about Fibonacci's, I was noticing that this is something called a Fibonacci fans. It's a great tool for somebody that doesn't like to draw their own trend lines. It's based on the Fibonacci sequence of numbers. And notice I did find I probed the lower trend line here and found a little support. So I was just watching to see if I could get enough strength to break above the upper trend line for a possible entry at that point too. No current position on 9/8. The sentiment was neutral to down. We had support near 105 and resistance near 110. The next trade would have to be a breakout above 105, 110.50, or a breakdown below 105.50. So I said to myself, okay, I'll take it either way. If it breaks out of the bottom of the channel, I'll go short or buy puts. And at that time, on that weekly candle, a ascending triangle was working on the pattern. However, as you can see, we ended up breaking out below that 105 support level, and we actually broke down and made new lows. So again, the yen being strong from everybody unwinding the carry trade, you can now, though, use a trading range strategy until we either break out of the 92-100 range to the upside or the downside. So if the yuck breaks out of the stage 1 base by 101 or 100 calls, if the yuck breaks out of the lower part of the range, then you could buy the 100 puts. So in other words, guys, as we are here today on 11/10, I'm planning for my trade based on what I'm looking at here. I notice my moving averages are starting to move down to the trading range. I see that I'm finding some support at about 92. I'm stuck inside this trading range. It could be a possible stage 1. I could buy calls at the bottom of the range, and I could buy puts at the top of the range as long as what? I stay inside the range. Okay, so the same picture as when I did this first one in July. Here's your picture right here, and there's your plan. And believe me when I tell you, I have no idea which way it's going to break out. And believe me when I tell you, I don't care. As a trader, I'm an equal opportunity trader. I can go long if it wants to go up out of the top of the range with strength, or I can go short if it wants to make new lows. Obviously, we could see this breakout either way. So a plan to buy 105 puts was executed in October when the yuck broke down through the 110-105 range. The position was closed when we found some support near 92. So I had planned to trade, but I had planned to exit the trade whenever we did find some support. Now, a plan to trade the current 100 to 92 trading range is to buy the 90 or 92 calls near the low of the range. And also, if you want, like we talked about earlier in the presentation, you could buy a protective put at the same time. If there is some kind of an explosive move to the downside, then you pretty much could be hedged at that point. And you shouldn't really have to pay a whole lot for the protection. Okay? The target is the top of the range to allow the 30 weighted moving average time to reach that new trading range. So as I look at this picture again, let's see if I have another chart. I'll go back here one more time. It's the same picture as it was in July. You've got a big stage 4 decline. You've got a trading range forming here at between 92 and 100, closer to 92. You can either break out one way or the other, and this particular, obviously, if we do break out to the top, it would mean that a lot of these hedge funds would be putting on some kind of a risky carry trade again, or some version of it. And we'll participate in it just by buying the calls on the breakout of the range, or you can, again, try to play the trading range. You could sit in that trading range for a long period of time. Obviously, you must protect yourself if you do any kind of put or call selling. So make sure that you do protect yourself either way on this particular currency pair. Okay? All right.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.